and welcome to this session where we will see the impact of the account aggregator uh, ecosystem on life insurance. I have a brief presentation which I want to take you through, so let me quickly share that presentation. So I guess the presentation should be visible to all of you. Uh, this is the agenda which I will cover. I briefly wanted to take all of you through the life insurance industry, a couple of slides on the background, uh, a, a single slide on what India First Life Insurance Company does and where we stand in the life insurance industry. A little bit on what is life insurance, the meaning of underwriting, specifically in underwriting, what is financial underwriting, because that is what has an impact and will be influenced by the account aggregator network. And obviously, the last part would be on the account aggregator ecosystem in life insurance. Moving ahead, I just wanted to share some numbers which will give everyone the impact of the life insurance industry. We have 24 companies. Across the industry, there are more than 3 lakh employees, 24 lakh agents. In the financial year ending March 2021, the new business premium was 2.8 lakh crore. And the total premium, including renewals, were 6.3 lakh crore. So it's an industry which has a significant impact on the economy of the country. 25 crore people were covered in that financial year. And there are government schemes which ensure that the number of people who are covered are much higher. So it has a social footprint, it has a financial footprint, and obviously it has a physical footprint. Just so that we understand the impact, more than 21 lakh claims were paid in the financial year ending March 2021. Moving ahead, I just wanted to share the growth that we are seeing in the industry. 2001 was the year when the industry got the private insurers. We had LIC, which was a dominant player, the only player before that. And from the financial year 2001, 2002 to the financial year 2021, which is about 20 years, we've seen that the new business premium has grown 14 times. The total premium has grown 13 times. The penetration of insurance, because this is a product which goes and serves the financial need and the financial security of individuals, the penetration has increased from 2.1% to about 3.2% of the GDP. Assets under management, 46 lakh crore. So it's a huge number, but the point that I'm trying to impress upon here is that the industry has grown and it will continue to grow, considering that the need for financial security will always remain. How has the industry grown? I think the focus that the industry has had on penetration, the focus on going digital in everything that we do has helped in going and touching lives of people. So whether it is in prospecting, whether it is in customer onboarding, whether it is in customer service or the use of data and analytics, we have integrated with multiple ecosystems. So you have UIDI, where we have Aadhaar, we have CERSAI, where we have CKYC, we have NSDL, which validates the PAN for customers. So identification of customers, assessment of risk profile of customers have helped due has been easier because of the way the digital ecosystems have come in. IIB is the Insurance Information Bureau of India, where we have data relating to the insurance policies of the insurance companies. The credit bureaus which have come up have helped in assessing the fraud risk, the financial risk. The digital payment architecture, obviously we all know how UPI has been successful. And now we have the account aggregator platform, which we believe will go a long way in assessing the financial profile of customers. So this is about the industry and how it has evolved, how digital and technology has played a role in its tremendous growth. A slide on India First Life Insurance Company Limited. We are a company which came in much later. We were launched in 2009, not during the initial part of privatization in India. Our largest promoter is Bank of Baroda with a 65% stake. In the last financial year, our new business AP has grown 47%. We were the number here, if you see, we did 1,479 crores. The retail new business AP is annual premium equivalent. So our retail business grew 50% to 1,345 crores. The renewal premium has grown, our industry ranking has improved, a 13-month persistency, which basically reflects on the customers paying us the renewal premium, has also increased. We are a fast-growing company and we aspire to grow faster. Moving ahead, I just wanted to have a very simple definition shared of life insurance. So life insurance is a contract whereby the insurer, in consideration of premium, undertakes to pay certain sum of money or annuity on the death of the insured or expiry of the specified period, whichever is earlier. So here, whether we look at term insurance, which is where a premium is paid and a death claim is paid during the time of the unfortunate demise of an individual, and nothing is paid if the person were to live through the tenure of the policy, is a pure term insurance policy. The non-term policies also have a savings element where if the customer were to live through the tenure of the policy, there could be money which would be survival benefits which could be paid at intervals or at the maturity of the policy. So you would broadly have two types of life insurance policies, term and non-term. Within non-term, you could have savings policies where survival benefits are paid over the tenure of the policy or at the maturity of the policy, or there could be policies which are unit linked where the savings element is parked with debt or equity funds, so that your savings element depends upon how the fund performs. There are variants of policies where we look at linking the policy payouts during the life cycle of a particular customer. So whether you're getting married, you have your kids going to school, then their marriage, then your retirement, and then the entire retirement planning. So you have products which are there for looking at the different needs which are there based on the stage of the life cycle where you are. Now, we come to what is underwriting. Underwriting is about which customers to give insurance and how much to give. In insurance, we look at the mortality risk of an individual, and we have a gradation. So there could be people with very low mortality risk, relatively low mortality risk. We call them standard lives. Where the mortality risk is higher, they are substandard lives. and the premium could vary based on the particular substandard or substandard life. There are certain instances where we believe that we should not give a cover because the mortality risk of that individual is very high. And in such cases, the proposals are rejected. Here I've mentioned about a word called anti-selection. If the mortality risk of an individual is much higher than the priced mortality, then we would not extend cover to that individual. So it is the job of the underwriter, who's the person doing the underwriting, to assess whom to give the policy and to classify the risk of all the applicants. If we do our underwriting properly, we will be financially stronger and companies will have a competitive advantage. Now, underwriting broadly can be classified into two categories. One, where we look at medical underwriting, and one where we look at financial underwriting. Medical underwriting is where we look at the risks which could be due to age, sex, build, physical condition, impairment, and all the things which I'm sharing on the screen. So if we have an applicant who's younger, then the premium charge will be lower because the mortality risk logically is lower. Similarly, if there is someone who has a family history where there are ailments which the parents have or the siblings have, we would have to rate up the premium to ensure that the risk taking is commensurate with the priced premium. So all of these, so height and weight, age, sex, all of these come into, is taken into account while we look at the physical parameters for medical underwriting. The occupational hazards which are there are certain professions, certain occupations where there is a relatively higher mortality risk. It is not that we do not offer life insurance policies to people having those occupations, but those proposals will be rated up or the premium will be increased to reflect the risk that we are taking. Moral hazard is where we look at whether a person who we are giving a particular coverage, is that more than what we should give or it is appropriate. So we would not give someone a cover of 10 crores when the person does not earn more than 5 lakhs annually. So I've given an example, which is perhaps an exaggerated one, but this is to look at what we call the financial underwriting, and which is what we'll get to the next slide. So insurance is meant to compensate for unexpected loss of income due to the death of the life assured. We do not want to over-insure. So we need to know how much is the human life value. What would be the financial impact due to the untimely and unfortunate demise of an individual? It cannot be more than what the person is slated to earn. And how do we do that? This is where we look at income multiples. So if you are young, if you are at the age range of say 18 to 25, the sum assured or the coverage could be 25 times or 30 times your gross annual income. But as you keep growing older, that multiple reduces. And at the age of 60, greater than 60, we look at cases on merits, because there the ability to take mortality risk reduces. So This is what we do in financial underwriting, and where we look at the proposer's occupation, the salary, wages, their ability to pay premiums. It is not about paying the first premium. Life insurance policies are long-term contracts where we have to look at the ability of the individual to pay the premium for the tenure of the policy. And for that, we look at various proofs of income. So a standard income proof would be for a salaried person, a salary certificate or a Form 16 or Form 26As. For self-employed people, professionals, the income tax returns. The income tax returns obviously are the standard financial uh, evidence of income, and which we look at while assessing the ability to pay premium and the ability, what coverage we should be giving. However, at the same point of time, there are bank statements, credit card statements, fixed deposits, mutual fund investments. All of these will be able to give us what we call surrogate income proof. So if an individual owns property or has such investments, we are able to assess that the individual would have the ability to pay the premium, and we could go up and give them a higher sum assured or a higher coverage. So this is where the account aggregator network comes in, because we are going to be able to get financial information of customers, which today had been a very tedious process of getting physical documents and customers sharing all that information with us. Moving on to the account aggregate ecosystem, and how does it impact us in the life insurance sector? First, we know what the income profile of the customer is. Based on customer consent, if we are able to get the bank account details, their mutual fund details, the insurance policy details, because insurance companies would be both the financial information providers as well as financial information users. We would be able to assess what would be the ability of the customer to pay insurance premium over a period of time, and what should be the coverage. So need-based selling is something which will help us in a significant manner. The second thing is on risk and fraud prevention. Today, in order to get higher coverage, there are times where we observe that income tax returns get fabricated. We see that income documents get fabricated. Going forward, with digitally getting all this information from the financial institutions, the risk or such risk of fraud will significantly be mitigated. The third, obviously, our ability to estimate income. It may so happen that we may have someone whose earned income shown through salary certificates could be lower. But if we realize that the person has large fixed deposits or has inherited wealth, which is reflected in the bank savings or mutual fund company investments, we would be willing to give a higher coverage and a higher sum assured. So our ability to estimate income easily is something that we are looking forward in the account aggregator network. Obviously, all of this today we can get through physical documents, but the entire digital ecosystem and the security with which customers can share this information is the biggest benefit that we are looking at. There is also another very important aspect which we are looking at. Today in insurance, the time to get documents and the time to issue a policy will significantly reduce with us getting the financial information of the customers immediately. Today, the KYC related information, which we have already started getting through integration with UI, DAI, or through CKYC, or through the PAN validations, uh, the information that we get through integration with IIB or with credit bureaus on some income parameters, that has helped in ensuring that we reduce the time for processing policies. With the account aggregator coming in, I think that the entire financial underwriting will become significantly faster, and we may look at even cases or scenarios where we will be able to instantaneously issue policies based on this input that we would get from account aggregators. So this, in essence, is what the life insurance industry is looking at from the account aggregator ecosystem. Very clearly, we look at this is a general slide where we look at how the financial information providers, of which insurance companies, we will provide our data, and we are also the financial information users, because we will be heavily relying on getting the data which will help us in financial underwriting and in certain cases even medical underwriting. So this, in a sense, is what I wanted to share. I hope that the session was useful, and all the participants, my best wishes to all of you in terms of what you are designing, and hope to see a lot of development in this very interesting ecosystem. Thank you very much for listening. Thank you very much.